Hi there, welcome to my channel. Here's an update on my portfolio. We're at $214,184.15. And so I'm still in this covered call on SPY. And as you guys can see, today was a really good day in the market. SPY went up to $690 today. Here at the peak, yep, $690, almost $691. Now, from this call that I sold, um, which expires tomorrow, and the call that I sold here is at a 600 and let me see here. Where is it? Now we gotta look for it. Let's see. I must have passed it up, I guess. Yep, here it is. Okay, here it is. It's at a 687 strike price. So tomorrow, if SPY is anywhere above 687, then all these shares, 300 shares, will be called away from me. And so what will happen is that I'll get all my cash back at 687. So there is a little bit of upside because I bought the shares for 686. So if we go back to SPY and let's just scroll down right here. It's probably down here. No, there it is. 300 shares. I bought 300 shares for an average cost of 686 and 12 cents. So it's about 86 cents in difference. So there's a little bit of upside there, just about 86 cents in appreciation. So not much. But if the shares do get called away from me, I will profit $1,000 in 1 week. And that's probably what's going to happen. Unless, of course, since the market pumped so much today, tomorrow, is it going to be another green day? Is this going to start going into, 691, 692? If it does, then I'm not going to capture any of that upside. Anything above 687, yeah, I'm not going to capture any of that upside, but I already sold off that upside for $867. And I'm okay with it because once these shares get called away from me, I will profit $1,000 for 1 week. And of course, if that happens, which is probably what's going to happen, by Friday evening, I should be fully in cash, ready to deploy on Monday into some other ETF or probably doing another call on SPY. Now, by comparison, if I were just to have all my money in something like SPY, for example, okay, this is just an estimate of if I held SPY at an average cost here of $52.68. So if I would have stayed in SPY at $52.68, yeah, right now I'd be up because the market went up. But this would only make me in dividends on a monthly basis $2,078.78 per month. Now keep in mind I made $1,000 in 1 week. So I'm going to try to continue to replicate that week after week after week. Now, is there the potential to make even more than $1,000 per week? I think there is. If I'm able to get in at a very low price and then the price starts to move up, it might be more profitable to sell a daily call. So if it's more profitable for me to sell a call that ends on the same day, then that's what I'll do. If it's more profitable to sell a call that ends in 2 days or 3 days or 4 days or an entire week, whichever is more profitable, that's the one I'm going to do. So I think there is potential to make even more than just $2,000 a month and still maintain my principal, still maintain the amount of money that I have overall, and not watch it just decay or decline in value. Because if we go over here to this comparison tool with SPY in the blue and SPY in the orange, since SPY already has 3 years, a 3-year track record, we can see that SPY has only done 61.72%, which is, not bad. It's not terrible or something, but it doesn't match the S&P 500. The S&P 500 has done 82.60% in total return. And if we switch this over to price return, so let's switch that over so you guys can see in price return. Here we go, price return. In just price return, as you guys can see, the SPY has only done a little bit over 12% in price return, while the S&P 500 has done over 75% in price return. And so I think that, by simply holding SPY, you're going to make much more money, a lot more money, than if you were to hold SPY. Not only would you make a lot more money in total return and in price return, but if you need money, you can sell some shares. If you need money, you can borrow against your shares, or you can sell a call. So I think that I can probably generate more income than the guys at Neos, maybe. It's possible. There's another one that generates a little bit more, but it's basically the same thing. All these ETFs that are based on the S&P 500, they're not going to beat the S&P 500. And more than likely, me by selling calls, as you guys can see even today, I'm capped, right? I'm not going to capture this upside. But the thing is, well, when do you sell it? When do you sell it so that you can capture some of that money? Because if you don't sell when it goes up, if you never sell, then you never really get that money, right? At some point, you must sell. And so if I sell calls, then I'm actually making that money. If I never sell, then I'm not really making that money. It is appreciating, it is increasing in value. But at some point, if you need money, you got to sell some shares, or you got to sell a call, or use margin to pay for stuff. So I'm moving forward. I think I'm no longer going to be buying like SPY or QQQI or any of those ETFs. Although SPY is now considered a four-star ETF. So I'm not saying it's a bad ETF. It's good for what it's meant for, to pay you monthly income. And they're selling calls, and they're selling calls maybe a little bit out of the money to capture a little bit of that upside, so that your principal doesn't just decline like other ETFs. Because if we look at an ETF, like for example, let's look at one that pays a lot, which would be probably that one that pays a lot. That's also based on the S&P 500. I would say it's XDTE. So let's look at that in comparison here. And let's go to price. Let's go to total return first. And since it hasn't existed that long, I think we're going to have to go back to, let's go back to 1 year. So this is 1 year. And as you guys can see here, XDTE is the purple or bright blue looking line, right? Or it's like bright blue or purple or something. And so in total return, even in total return, this thing just, it's not doing very well. It's only done a little bit over 9%. SPY has done better than it. And of course, the S&P 500 is doing better. If we switch over to price return, your capital, if you bought it a year ago, your capital is dwindling. Look at this. Your capital is dwindling down. You're at a negative, almost 18%. So the value of your money is declining or has declined by close to 18%. So I don't care how much this thing is paying, right? It's paying like about $1 per month, or close to like 20 cents per week, which is pretty high, but it's not worth it. It's not worth it because your principal is declining. The value of your shares are declining. And even in total return, it's not doing that great. Switch this back over to total return. And man, compared to SPY, it's not good, So I think you're better off just owning the S&P 500. So that's what I'm going to be doing. I'm just going to own the S&P 500. I am probably no longer going to buy any of these ETFs that pay income, that promise really high yields. Nah, I don't want to do that anymore. If we go over here to the fear and greed index, we're almost at neutral, which is great. Neutral is good. I saw this in extreme fear earlier this year. For the most part, during the year, it's been in fear. Now we're headed, now it's in neutral. So that's good. All last year, back in 2024, it was in neutral practically the entire time. And that's why maybe all these ETFs that have such large yields were doing so well, because I was making like $10,000 a month in dividends by the end of 2024. But things aren't the same. Things aren't the same, and I need something that has a long track record, that's reliable, right? Something that's reliable. It's got a long track record. It's been doing well for years and years and years, and here it is, right? It's the S&P 500. Look at this. Look at this. If I would have known about this years and years and years ago, then I would have started buying it, right? I wish I would have known, but I didn't know. And so I'd probably have a lot more if I would have just started buying this years ago and just stuck to buying the S&P 500 and learning how to trade it, buy it, sell it, learning how to do calls on it. You'd probably anyone I think would be better off, personally, in my opinion. So yeah, this is my video, and those are my plans moving forward. Thanks for watching. You guys have a great one. Catch you in the next video. God bless. Bye.